Hi, it's Jasmine, your tax pro. I'm here to help you figure out how to make sure you are paying the correct amount of taxes this upcoming year. So we're in 2023 already, and it's going to be super important to make sure that we are paying the exact right amount that we owe and nothing extra. So I'm here on the IRS.gov website. On the website, there is a tool called Check Your Federal Tax Withholding. We're going to click on that. How it works, you can use this tool to estimate your federal income tax withholding, see how your refund, take home pay, or tax due is going to be affected by your withholding amount, and it's going to help you to complete your W-4. If you don't want to use this tool, you always can reach out to me and book an initial consultation. We can discuss your needs, and then you can hire me to complete your W-4 for you. And then all you'll have to do is just take it back to your employer, and they will make the necessary changes for your withholding. This is going to be part of tax planning, right? So let's get to tax planning this 2023 to make sure that we're paying exactly what we should be paying, nothing more and nothing less. So what we're going to need to be able to use this tool is a pay stub for all of our jobs. So it's going to be for you and your spouse if you have a spouse. Any other income information, so any side hustles that you have, self-employment income, investments, retirement, rental properties. You're going to want to do that here, and possibly a most recent tax return. All right. So you're not going to be able to use this tool, or it's not going to work for you as well as you would like if you have pension but not a job, if you are a non-resident alien, because your withholding amount is different, your deduction is different. You're not eligible for the standard deduction as a non-resident alien, and you have a complex tax situation. It's not going to be helpful for you either. So today we're just going to do a W-2 employee. So we're going to click on Use the Tax Withholding Estimator. It's going to ask you a few questions about yourself. So information about you. Let's say you are a single individual. You have a job that regularly withholds your federal income tax. Yes, because we're in this example, we are just a W-2 employee. Then you're going to select any of these that apply. So if you're 65 or older, you're going to make sure that you select this because your standard deduction is different. If you are blind, you're going to want to click this because your standard deduction is also different than the typical standard deduction. If you can be claimed as a dependent on someone else's tax return, this also impacts your standard deduction. So you're going to want to click that. And then if you have any children, right? So we're not going to select any of these today. We're going to go down to our income and withholding. All right. So this is based on you having one job. Let's say this is a salary job. We're working at our job all year. We get paid every 2 weeks. Right. Our most recent pay period ended, let's do 12/31/2022. Okay. And this is an example I use in another one. So let's say we make $2,500 every 2 weeks. Okay. Our salary to date is going to be $2,500. So based on information provided, it looks like your expected annual income from this job is $67,500. Is this correct? Yes or no? Let's say yes, this is correct. Let's say that our job withholds $306 every pay period from us. And year to date, we're going to say 306. We said this was our only pay period. Now, for these, we're going to want to select any of these situations that apply. Do we contribute to a 401k? Because that's going to impact the deductions and credits we may be eligible for. Are you contributing to health insurance plan? Because this is going to impact how much withholding you actually are going to need to contribute, because it's going to lower your income that you earn. Are you going to get a bonus? This is going to raise your tax rate potentially, because you are going to earn more income, you got a bonus, or none of the above. We're going to say, yes, we have health insurance. Our health insurance, let's say it's $500. Year to date, we've paid $500. Then we're going to go down to any other sources of income, or is asking if we've made any estimated tax payments yet. So scholarship or grant, depending on the type of scholarship or grant, this may be taxable income. So we're going to want to include that information if it is. Unemployment insurance is always going to be included. Self-employment income, investment, this is our dividends, our interest that we're earning. Any other taxable income, so maybe we have another job. Are we having additional taxes withheld, or are we making estimated payments for any of the secondary income? Okay, so these payments we would be making voluntarily estimated payments. You're sending those in to the IRS yourself, hopefully not in paper check. You're using pay.gov or IRS.gov payments to make those payments, because there is a backlog on mail at the IRS, and we really don't want to be losing money, like literally losing money. So we're going to select none of these situations. Okay. All right, and then this is asking us about any adjustments. So these are all adjustments to income that are typically going to go on our Schedule 1. So are we contributing? We're paying student loans. Let's say yes, we're paying our student loans, although we don't have to pay student loans right now. So we plan by the end of the year to make the maximum amount of interest payments, so $2,500. We're not a teacher. Deduction for contribution to an IRA. We said that we don't have a 401k right now, so we're going to leave this one. Health savings account deduction. We're not a part of that. Moving expenses. This is only eligible if you are a member of the armed services. Are you paying any alimony? This has to have been in the past. So this alimony had to have been prior to 2019, because you can't include that as income or an expense anymore. Penalty for early withdrawal of savings. This applies only to CDs or investment tools that you're using. So if you cash those in early, you do get a penalty. That penalty can be deducted from that savings. You're going to put that as an adjustment to income on your Schedule 1. And then this is any business credit. So we're just going to claim our student loan interest here. We're going to take the standard deduction. The standard deduction is increasing this next year in 2023 to $13,850. We're not itemizing. So this time we're going to just take the standard deduction. And because we didn't click itemize, we're not eligible to claim any of these deductions listed here. So we're going to click next. Okay. Here's some additional tax credits. So if we had children or dependents, we would enter those in here. We didn't select that we had children in this example. Foreign tax credit. Okay, if you earn income in a foreign country, you may be eligible for a foreign tax credit. If you pay those taxes to a foreign country, you will get credit for your taxes here. Educational, are you taking any additional college courses? You could deduct those there. Retirement savings, were we contributing to that 401k or IRA? Do you own your home? So we got our mortgage interest credit. We also have our residential energy credit. So if you're using, you got those solar panels or something like that, that would help you to get this credit here. Are you elderly or disabled? Are you getting a credit for that? Business credit, so general business credit. And then if you have any questions on any of these, this question mark, you just you click it and it'll give you more information. If you pay the alternative minimum tax in the previous year, you can get a credit in the current year. And then energy efficient vehicles. Okay. We're not selecting any of these, so we're going to click next. So this gives us our results. Okay, so our withholding is going to be $8,262. Our tax obligation, so this is how much tax we owe based on the tax table and our income for the year. Okay, so based on the amount of income that we earn, we said it was 67,000. We're going to have a tax liability of $4,301. We have a withholding of $8,262 in the year, meaning we would get a refund of $3,961. Most people are excited about refunds at the end of the year, but what that really means is that you're contributing too many dollars to your withholding up front. So you could adjust your W-4 to decrease that withholding amount, and that will give you more money every pay period. Okay. So this is just a recap of what we said that we earned, our income here. Non-taxable payroll deductions. Okay, that's our health insurance contribution. You see that decrease the amount of our income, 54,000. The federal much we expect to withhold if we make no changes to our W-4, it's going to be $8,262. We said that we're going to be paying our student loans this year, so 25. This adjustment is reducing our taxable income. So this 54,000 is going to be decreased by this $2,400, making our adjusted gross income only $51,500. This is the standard deduction this year for a single person, $13,850. Therefore, your taxable income, because you subtract the $13,000 from the $51,500, is only $37,650. This is what goes into the tax table. Okay, so on the tax table, we're looking at our taxable income, and it's going to pay in taxes what our liability is going to be. It's only going to be $4,301. So our total tax liability after credits is $4,301. We make no changes to our W-4 this year, then we are going to withhold $8,262. However, we can adjust our W-4 okay. So this slider is going to adjust your refund, right? All right. So we want our refund to be zero, right? What we are doing by getting a refund is giving our money to the IRS and letting them hold on to it as if it's a bank. Okay, just the way you put your money into the bank, your savings account, the bank then can use your money as a tool. Okay, we are doing the same thing with the IRS when we are generating these large refunds at the end of the year. So if you pull your withholding down so that you only have $0 in refund at the end of the year, you don't owe, you don't get a refund, then you're getting more of your money each pay period. All right. So to get our desired amount, you will need $148 withheld from each paycheck. That is a decrease of $158. Okay. The standard withholding is $177 per paycheck based on your filing status and income. So based on the fact that you make $67,500 as a single person, your standard deduction is at $13,800. The withholding would be $177, not $306, which was previously put into the W-4. These are instructions for how you can do it yourself. You're going to print out a W-4 form right here on the IRS.gov website. and you're going to enter $761 for credits or other reductions to your annual withholding in line 3. Okay. And then you're going to print it out, sign it, date it, take it to your employer, and then they will make the necessary changes. You will have zero refund at the end of the year. You will only pay what you owe. Okay, this is our first step into tax planning. If you have any questions or concerns, or this is too much, you don't want to have to deal with this on your own, we can help you with that at Hunter Virtual Bookkeeping and Tax. Help you to pay only what you owe, nothing more and nothing less. I am Jasmine Hunter, jhuntermba.com. Book now for a free consultation and sign up for tax planning.